from this entity later on this summer. We heard last week about 3 or 4 of the projects where next week we're going to really get into the weeds on the marina and just the challenges there, as well as the economic derivative that we get and the city of Racine gets from the marina. But today we are not, and what I mean, we stay. If we're not advocating for any particular funding mechanism, we really want the finance committee to hear from PFM and Kristen and Matt in particular, along with our finance director, who's done a great job of teeing this up to this point, just about the different options that are out there, and just what potential routes we can move going forward. So I really appreciate those of you that have joined us virtually. I'm really hoping, again, stressing the need for engagement from the legislative branch of Racine County government on this. And then I'll just lastly state, we will be having a public hearing. Next week, we'll hear about the marina. To move forward. So this is a transparent process, which something Racine County's had a long history of. Again, building brick by brick through the transparency to our taxpayers. So with that, again, I appreciate everybody attending, and especially those virtually. And Gwen, again, great job. Really lucky that we have PFM on our side. And I will turn it back over to Gwen. Thank you so much.
Thank you. To introduce Matt and Kristen from PFM, our financial advisors, they're going to go through this PowerPoint, which kind of outlines base level of where the county is at right now with debt, and then the impact that these projects would have on it if they fully hit the levy. Again, to the county executive's point that we're pursuing alternative revenue to help pay for the debt service for it. So we'll speak a little bit about that, but ultimately, looking to hear the committee's input on this and using that guidance going forward.
Thanks, Gwen. Kristen and Matt, welcome aboard, and good to see you again. I'm going to let you proceed with the presentation.
So we're starting on page 3 of the PowerPoint, and this basically talks about the agenda that we're going to walk through this evening, focusing mostly on the projects that County Executive mentioned, but kind of we want to set the stage about what's happening in the county, and so you understand what kind of assumptions we've included going forward. So you can see we're going to set the stage, talk briefly about the CIP borrowings, and then talk more specifically about the proposed projects and how much we're talking about bonding and what that might look like. So if you skip to page 5, you can see this graph shows the existing debt service that is supported by levy here in the county. This includes the debt that was issued in 2003, as well as that partial redemption of the 2013 refunding bond. So you can see that little dip in 2026. That's because of that refunding, the partial kind of paying off of that debt. So we will be able to kind of fill in new debt into this existing debt service structure. Page 6 shows what the county's TID out equalized value is. And so you can see what's been happening since 2016. In the last 2 years, you've seen, around a 10% growth in value. When we start talking about the assumptions with the proposed debt service schedules for the projects, we are using a 3% growth in value just because we want to be conservative, but this is also part of a discussion that we can have with the finance committee going forward. Page 7 shows what that mill rate is for that existing debt that is supported by your levy. Once again, assuming that 3% growth in value. So you can see in 2024, it's about kind of 40 cents per thousand, and it decreases going into the future. Annually, skipping to page 9, county does annual borrowing for its CIP projects. What has traditionally happened is in the fall, as you're going through your budget process, we set the stage for the borrowing for that future year. And so right now you can see.
Mr. Chairman, just one interruption for those who might be listening at home. Could you explain what CIP is?
Capital Improvement Plan. Thank you. So you can see on this chart, the blue bars show that existing levy that I talked about previously. And then the orange shows the already approved 2024 CIP borrowing. So back in October of 2023, the board adopted parameters resolutions for the 2024 borrowings, which are included in those orange bars. Slide 10 shows what that mill rate is for the existing as well as that already approved CIP borrowing. And then page 11, we've had discussions with the county about, because you do the annual borrowing every year, we have built in kind of a plan for future CIP borrowings of about $9 million a year and kind of capping out that levy required for the CIP debt just under $11 million. So that's what that bar shows. So you can see the blue and orange bars, and then the yellow shows an additional 10 years of CIP borrowing. And so this is before we start talking about the projects that have been mentioned. Page 12 just shows what's going to happen to the mill rate with those proposed borrowings. And obviously, depending on your whole budget process and your needs, those numbers can and will change. So last week, there were 5 projects that were discussed. So if you look on slide 14, the proposed projects and costs, there's the 911 radio infrastructure project. That project is estimated at $23 million. And for purposes of the discussion today, we're assuming just one bond issue in 2024. The Public Safety Center is estimated at $40 million. And so we're assuming future borrowings, one in 25 and 26. The Mental Health Building plus the Human Services 4th floor renovation project. That total project is estimated at $37 million, and there's been $14 million of ARPA funds that have been obligated for that project as part of the 2024 budget, which looks at an estimated borrowing of $23 million, $18 million for the mental health building, and $5 million for the 4th floor renovation. And there has been discussions of using some of the opioid settlement dollars to help pay towards the debt service payment on those. The ice rink project has been identified. The total project for that is $13 million. There has been fundraising by the nonprofit organization. So there's been $8.3 million in pledges, which would put a borrowing estimated at $5 million in taxable debt. And that would be depending on how fundraising goes. One issue issued in early 2025. And then lastly, the Marina project, which has been in discussion, that total project is estimated at $32.5 million. It is a phased project, with phase 1 being issued in 2024 to address some kind of fuel tank issues, with the 3 other phases being issued in future years. And the debt service for that will be partially offset by Marina fees. So I don't know, Gwen, if you want to add anything at this point.
So what do you expect phase 1?
Supervisor, can you please use a microphone so that the virtual can hear?
For the Marina project, I'm wondering what you expect phase 1 to cost?
We're estimating that at about $8.5 million. We do have a future call set up with the Marina, the folks from Founders 3, to just talk in more details about the cash flow pro forma. So that's to start with. So we're estimating about $8.5 million of borrowing for phase 1. And then the remaining borrowing is split up approximately in, a quarter in future years. And I said, we have a call set up with F3 to talk about the pro forma and the project. So we'll be getting more details, as will you.
Kristen, excuse me. Can you explain specifically the resolutions will identify separately a dollar amount maximum of borrowing, correct? Over a period of time too? We give you the authority to borrow funds over a period of time?
Yes, correct. The last part of the presentation, we'll talk about the process and what that looks like. And some part will be different than the parameters resolutions that you use for the budget process, just because the projects are phased. So based on these assumptions, we have put together kind of annual debt service requirements, just as a discussion point for you to kind of understand how we might structure this, assuming the board decides to go forward with all of the projects and the dollar amounts are as what we're discussing. So as you can see, it's all color coded. And basically this shows your existing annual debt service plus that estimated $9 million a year in CIP borrowing, and then the phasing of all of the projects discussed on that summary page before this. And so you can see when I talked before about the CIP projects that the levy was just under 11 million. As you phase in these projects, the levy, assuming no alternative revenue sources at this point in time, would reach between 20 and 21 million in about 2031.
Question. I keep seeing the 9 million number that's being used for a 10-year period,
Yes.
but yet I'm seeing the totals being 113 million, which is far short of 90 million over 10 years. Where does the 9 million come into effect? I know that's an average over 10 years, but yet we've been adding these numbers up, and we're talking about borrowing $110 million, which is a far shortage of the $9 million that I'm seeing the number being allocated. I see Gwen's got her hand
Yeah,
up
I could speak.
and has an answer for it, so.
I do, yes. In the annual budget process, when we come with the projects with the highways that we want to do, with the plow trucks that we need to replace, the squad cars that need to be replaced, all of that, that's where we're saying that would be our $9 million a year.
Got it.
We would make that an even amount so that we can more easily plan for that staying static on the tax levy. And then these projects would be
Thank you.
abatement. So they added a line
Thank you.
there to keep the trend line.
Thank you. Different pot. Thank you. Thanks, Kristen.
You're welcome. The next slide shows what this might do to the mill rate, assuming that 3% growth in value. And you can see that the mill rate increases approximately 36 cents per thousand for all 5 projects, in addition to the mill rate that's required for the annual CIP projects. And so the mill rate will peak in 2027 and then start decreasing as value goes down.
Okay.
And right now we've assumed, just so you know what the assumptions are, for the tax exempt debt, we have assumed 20-year GO debt because that's the maximum you can go. And for the tax exempt borrowing, we're using a 5% interest rate. And for the taxable, and at this point, we're just using taxable rates for the ice rink of 5.5%.
I want to interrupt you a moment here. We have some county board supervisors, the chairman and the vice chair in the audience here. And I want to see if they currently have any questions of you. Chairman Kramer.
Thank you. I'll just
Give you a mic.
Yeah, I just wanted to know with the projects, did we did we use any inflation rate for the cost of materials and that type of stuff? Or were that just the estimates that we are looking at?
I can speak kind of project to project. So the 911 radio, we recently got back the RFP for it, and that number is the number. We are currently in contract negotiation. The 23 million includes soft costs and owner costs that we would need to do for site remediation, some HVAC equipment upgrades. The bid came in less than that. So 23 is a conservative amount of that we're not going to exceed that. Anything we don't use will return back to debt service to pay off debt early, or we will take less in capital projects bonding for the future. The marina is an estimate. It will need to be bid out and we'll need to go through procurement on it. I've seen 2 estimates come from F3 this week. The first one was not good and I told them to come back with better numbers, and it's still in the 32.5. Obviously, as bids come back, we'll have to adjust the project if it goes over. Because we're not really interested in coming back to the county board and asking for more money for that. So we will just have to manage that project. The ice rink, we have a RFP out right now for the design. However, the county is only interested in the $5 million. That's what the county board considered earlier this year in the resolution allowing them to fundraise. If the project goes above that, it's not the county's responsibility. It would be the fundraising group. The mental health building is a pretty clean number. We have the architect and the construction manager on site. We were meeting even yesterday afternoon and basically let them know we're not going for more money, so you need to make this work. And we're just adjusting our design as needed for it. We're not going to be coming back for more money. And then the Public Safety Center, the RFP is out right now. It'll come back mid-July. That one is not as tight. However, we know the square footage and we know recent public safety buildings that were constructed. So we used those price per square footage to come up with an estimate. I do think the construction budget will be about 35 million. That's why we're going for a request of up to 40, not to exceed it. If the design comes back or if the procurement comes back where it'd be higher, we're going to adjust our design so that if it's more in line with what the board would be considering.
Thank you.
Also, Mr. Chairman,
Yes.
Who's speaking?
Jonathan.
Thanks,
sorry.
Jonathan.
Yeah, I'll make sure I identify myself. I wanted to follow up, very good question by the chair of the county board. I would say the only project that I really worry about in terms of factoring in the inflationary costs is the ice arena, and I just want to be transparent on that. But Gwen is right, we've said 5 million, we're gonna hold to that. And it's really, I think there's other options, that the county would not be exposed or responsible for if the overage comes in higher than what we initially thought. But we're committed to that $5 million and only that 5 million and up to 5 million. Thank you.
Thank you, County Executive. If you could continue, Kristen, thank you. I think we left on page 16, you left off?
I did. So I was talking about the mill rate. And then the next slide, 17, basically shows what the annual debt service payments are. I identified project by project, so you can see what those look like. And you can see what the total debt service will be on the right-hand column, including both principal and interest.
So Chair, if I could add to this.
Go ahead, Gwen.
We have obviously been talking about seeking alternative revenue for the marina. This would be if the full project fully went on the levy. And that's not typically what we've done with marina projects and is not absolutely what we're proposing here. because that would include a revitalization and a restructure of the marina. The management company expects that their revenues will increase tremendously. And again, that's what PFM was saying, that they have a meeting with them coming up in the next couple of days to really dig into that and find out how much money we think we're going to get. That increased revenue will offset this debt service. It would not cover it completely, but it would cover a lot of it with the numbers that we have right now. And then with the mental health building, we've worked with WCA and with Attorney Circuitous here to look at allowable projects that can fall under the opioid settlement dollars. We believe that 25% of the building, which will be a SUD, substance use disorder, CBRF facility, would be eligible for opioid. And so we have a couple different mechanisms that we can do. But at this point, we believe that 25% of the annual debt service could be covered by the opioid funds, of which we have already received significant amount, and it's sitting in LGIP just earning interest, ready for expenses.
Thank you, Gwen. You're on. Continue, please.
So on page 18 is the proposed pro forma for the entire phased marina project that had been provided by F3 back in November of 2023. We are anticipating, based on the conversation we have with them, that these numbers may be updated. So this gets into the details. We want to, at that time, get into more details about the cash flow to be able to kind of let you know what those possible alternative revenues that can be applied to any debt associated with the marina project.
Hell, that's double. Sure. Supervisor Ekman.
Does, do you know what our total outstanding debt is now? Either
67.
Otherwise, I do.
67.
Our current, including the Foxconn debt, or the TID 5 debt, formerly Foxconn debt, which has a guaranteed revenue source from the special assessment, is 146 million. And we are using 14% of the debt that is allowed to us per state statute.
Thank you.
What is the debt without Foxconn?
73 million, or
Thank you.
7%.
Thank you. Okay.
Any questions about the debt service, about kind of some of these questions related to the situation, the debt situation of the county at this point in time?
Youth and Governance Committee. Not at this time, if you want to continue.
So this slide shows kind of the meetings that are coming up related to these projects that Gwen had identified, and then you had raised, Chairman, you had raised the question about what does this look like going forward in terms of resolutions. So there's the series of meetings this in June and the possibility of July, depending on the decisions of the board, first and second readings of resolutions. For these 5 projects, there would be 5 separate resolutions. Some of these projects, because they are phased, would be what's called the initial resolution. It would not be a parameters resolution because the parameters are very specific. They are basically setting the term of the bonds, when the bonds are going to be dated, what kind of call feature, a not to exceed interest rate amount, what the estimated maturity schedule might be. So because of those specifics, if you have a phased project, if you're going to be issuing bonds over a series of years, you're not going to know the exact timing of the debt, what the market is, what the structure is going to be. So for those projects that you're looking at phasing them and not issuing bonds yet this year, that would be an initial resolution that would require the 3/4 vote of the county board. For the projects that would be one issue and you're going to be issuing this year, you could do a parameters resolution. So it's just going to depend on a project, in this case, project by project basis, what that resolution is going to look like. And I had that conversation with bond counsel.
Any questions from our committee in regards? Supervisor Miller.
Thank you. So, very helpful information. So in the case in which we would use all levy, which is not our plan, you're saying 36 cents per thousand. So I'd like to bring it to a constituent or neighbor reality. So if someone has a $300,000 house, that would add $108 to their property tax bill. And
Basis.
I always like to say daily, so that's about 30 cents a day. And well over half of this is for public safety. Because the two big projects are public safety. Just
Yeah.
wanna,
If I can add to that, Supervisor, our current mill rate for general levy and for debt service is $2.72. So that would put us just about $3. Brown County's is 304, Kenosha's is 335, Outagamie's is 3, Rock County is 409. We're still very low comparatively to those neighboring counties.
and the other counties is this year.
Yes.
Right now, today. You said $3 approximately. Does 270 now or two? Gotcha. Okay.
Mr. Chairman,
Supervisor Wish.
I don't like to assume anything, but it looks like these are all, you've separated them out by what it is, okay, which it is. And I'm assuming that's for the purposes of county board, somebody coming back and saying, we agree to this resolution, we agree to that resolution, but this one we're kind of in agreement on. I'm assuming that's what that's about. Is that true?
No, you could answer that.
I don't know that I'm following your question.
Everything is divided by the type of.
I can answer that.
Go ahead, Jonathan.
Thank you. Yes, Supervisor, which your point is accurate in terms of we want to separate that out. We're having a public hearing on each project. And to say it's either all or nothing, I think would be not prudent, transparent wise. And the appetite for each individual county supervisor on each individual project, I felt is going to be different. So that's why we separated it out.
Thank you, Jen. And I do have a follow-up to that. I don't, again, like assuming anything, but maybe it's too early in the discussion, but I know we talked about you talked about needs and wants. And obviously, if you've done this the way you've done it, is that the case that not all of these have to happen at the same time? That this could be postponed or part of it could be postponed?
No, I mean, first of all, some of these projects are already phased, in particularly the marina. But the marina, we're being told on the fuel tanks, we've got to do this. It's not ADA compliant. The mental health, we've already approved in the budget. We have to spend the ARPA money and designate that by the end of 2024, and we have to spend it by the end of 2026. I think I've laid out the need for the 911 infrastructure, and then the public safety building. The current one doesn't. I've gone into why we need it, but essentially you can't run a 911 and along with the 911 infrastructure out of that building. So that's why I would say all of these are pressing. Again, some of them are, in particular, the marina can be phased, but they're all at ahead.
Okay, thank you.
Supervisor Spencer.
Thank you. I just need clarification about, are all of the resolutions going to be first reading on July 9th and second reading? Are they all going to be on the same evening?
Yes, so the plan is on June 25th, the night of the public hearing, the joint executive and finance committee meeting. The resolutions will go before the committees for approval to come out of the committee and then go for first reading on July 9th, not that same night.
So the public hearing is on all of the proposals, not just the marina presentation?
That is correct.
Thank you.
Supervisor Ekman?
Maybe just want to clarify that there's no assumption for TIDS closing in any of this, right? So,
Correct.
okay, thank you.
Supervisor Rowenhouse has a question from the audience.
Question and a comment. Question, comment, and perspective perhaps. I want to understand correctly, when you say 7% or 14%, when you're talking about allowable debt service that the county can assume, is that correct?
That's correct. The state statutes allow us to take 5% of our total equalized value of the county.
And that number right now is at 7%. So there's a 93% window, if I understand it correctly.
Without the Fox Fund.
Without the Fox, right.
That
Okay.
is correct.
Given that, and then maybe you or Jonathan could answer, for perspective, I just want to have perhaps perspective on the financial health of our county. Of the 72 counties, where's the number fall in terms of indebtedness? We're at 7%. Is that, are we in the lower echelon, or are we middle or high, or what's our culpability right here, I guess?
I have not done a deep dive analysis on all 72 counties.
No, I'm not asking.
I've done our area counties. So if ours is, it's actually 6.8% less than 7%.
Right.
Brown counties is at 4%. Kenosha is at 14%. Marathon also at 14%. Milwaukee at 10%. Waukesha at 2%. Winnebago at 3%. Washington caps themselves at 2%, and Walworth has no debt. And for reference, the city of Racine is at 43%.
Okay, I guess the numbers are what they are, so thank you.
Supervisor Ekman.
Supervisor Miller suggested I expand on my question about TIDS closing, and my point being that when the Foxconn Microsoft TID closes, right now, if I keep track, Microsoft has Foxconn has a guaranteed assessment of $1 billion, and then Microsoft was at least $3 billion. So if nothing else happens, that's $4 billion on top of 22. So about 20% increase in the assessed value of the county when that TID closes. I don't know what the latest forecast is for when it closes, but that would be, $4 billion that would move to the tax rolls once the TID closes.
We can factor that into some future assumptions when that happens.
It might be after the 20 years is over. I don't know.
I think it might be pretty close. The last that I remember, I believe that TID's supposed to close in 2040, 2045, somewhere in there. I don't know if they will amend the TID because of the new development. We haven't had our joint review board meeting yet, but once I receive that information, I can let the board know.
Great point, Supervisor Ekman. Thank you for bringing that forward. Any other questions from the committee? Any other comments from the committee? Kristen, comments? Matt, comments? No? Okay. Gwen, last but not least, comments?
I have a quick question, actually, Supervisor Trottier. It's
Okay.
It's Supervisor Tony Verant.
Yes, sir.
And I'm a newbie, and I don't know if this is a good question or not. You guys probably know the answer, but when is the last time has there been any work done on the condition of the break wall in this regards to the marina, the break wall in the water structures protecting the marina. What's the condition of those?
I'm not specific on those. I don't know, Gwen, if you have any comments on those. I think the county executive might. I don't know if he's still on.
I guess I'm questioning that because,
Mhm.
if some of that structure gives way in any part, that can be a costly endeavor too after making this investment into the marina.
Yeah.
I'm just curious
Supervisor
to know.
Baranth. Yeah,
Yes.
I know that the county executive has been working on that at a federal level. Okay. And we're waiting. What level they're at, I'm not sure, but that is something that the county executive is well aware of and in the process of working on. And it's a very good point. I mean, we don't want to do the work if we can't fix the break wall. I mean, so, good question. Thank you.
I think that's a great question, Supervisor Brandt. And the last I had heard from our public works director is that they're continuing that conversation on the federal level to either receive money to fix it or to give ownership of the breakwater over to the feds so that it's their responsibility. I will follow up with the county executive and with the public works director and update this committee with information.
Perfect. Thank you.
Thank you. I think for now, we have all the questions answered for now. Thank you very much, Matt, Kristen. Thank you. I didn't see any other questions from the audience of the County Board Supervisors, so we will move forward with the next agenda item. Thank you very much.
Thank you.
Next up on my agenda is we have the County Treasurer, Jeff Lattis, donation of 15 in-rem properties to the City of Racine Community Development Authority with partial compensation for Lincoln King redevelopment project. Action, first reading, June 25th, 2024. Welcome, Jeff.
Thank you very much. Good evening. The City of Racine Community Development Authority presented a request for donation of 15 in-rem parcels in their Lincoln King neighborhood. They have the intent of doing a redevelopment in that area, and the request came through. It included a proposed compensation for some of our costs associated with those properties. The proposed compensation was for $136,095.70. As a point of reference, the county has $427,095.70 invested in those properties through previous settlements, carrying costs, those types of things. If approved as requested, it would equate to bad debt associated with that donation or transfer of ownership of $291,000 to the county. So I presented the information today for consideration. I've included a map of the Lincoln King neighborhood. I do know that the City of Racine Community Development Authority sent through a subsequent follow-up letter that came through yesterday and should have been added to agenda items. Speaks a little bit to the scope of their project and their intentions with regard to the parcels that are being considered this evening. Again, the map includes the locations of those parcels in relation to the approximate boundaries of the Lincoln King neighborhood. And I'm happy to take any questions that you might have.
Questions from the committee? Supervisor Miller.
Thank you, Mr. Chairman. Jeff, could you explain that second last column, anticipated county sale position?
Absolutely. So since I've been in office, we've sold 159 in-rem parcels through the sealed bid process or sealed bid sale process. The historical sale price, the third from the right, that reflects what I would anticipate selling the properties for if we took them to sale in a sealed bid sale. So essentially, if we were to take those to sale, I would expect that we would be able to recover approximately $291,000 of our $427,000 that are into those parcels. We would have a bad debt position of $136,095.70.
Jeff, can you repeat that, Jeff, please? The figure.
Absolutely. So the county has $427,095.70 invested in those properties. If we were to take them to sale through sealed bid sale, I would anticipate recovering approximately $291,000 through that sale process. And we would anticipate a county bad debt position of $136,095.70. So as a point of reference, the dialogue with regard to the request for donation has been going on for quite some time. The properties in reference here, the 15 parcels, they were taken in the 22 and 23 foreclosure action. Many of those properties were considered and taken at the request of the Community Development Authority because they would be able to utilize those in the Lincoln King area. Throughout the entire process, I had taken a position with that dialogue that, I, in my position, would support an offset to our expenses that would essentially equal as if we were to sell those properties outright. So my anticipation of the letter request that came in was that we would likely be getting a request for the donation or transfer of those properties with an offset of $291,000 because that's what we would otherwise get through the sale process. There was apparently a clerical error on the City of Racine Community Development Authority in interpreting the data here. And that's why we got the request for $136,000 as opposed to the $291,000.
Yeah, Mr. Chair, if I could
Supervisor Miller.
just follow up, that's what was confusing me. So that explains it.
So essentially, they looked at the same chart that I presented to you or the same spreadsheet that I presented to you, and they thought that the $136,095.70 was the number that the county would be looking for to offset expense.
I didn't realize you were serious.
Neither did I. Supervisor Ekman, you have a question?
Yes, the map, is there any significance to the 6 properties that are outside the boundary? You said it's approximate. I don't know, does that matter? Is there any?
It doesn't. I don't know all of the specifics. I know that with regard to the funding sources that the City of Racine Community Development Authority has, a lot of those are through the ARPA grant funding. And I know that the parcels that have been requested fall within the scope of that funding restriction. I understand that, some of those parcels are outside of the concentrated area. I do believe that, in looking at other efforts that have been made by the city, their main focus is really to concentrate on that Julian Thomas neighborhood right around Memorial and State Street. And that's where they would prefer to have the highest concentration of redevelopment and then branch out from there. I do know that in September of last year, the City of Racine had issued eminent domain letters to 62 occupants or owners in that immediate neighborhood around Julian Thomas. And I know that they have had ongoing efforts to secure properties through that process and negotiation of purchase. The follow-up letter that we received from the CDA yesterday indicated that they've been successful in purchasing 5 of those parcels through that process. I did a little bit of legwork on that. I was able to confirm and verify 3 of those purchases. So essentially that purchase process through the eminent domain, it does require that an appraisal is done, and that appraisal is the basis for negotiation for the purchase of those properties. When I looked up the properties that I could verify that had been purchased through that process, they had an average assessed value of $33,000 per parcel and average acquisition cost of $81,000 per parcel. So essentially, through that negotiation process, the CDA has paid more than double the assessed value of those parcels for that acquisition cost. At the $291,000 that we were originally discussing, that is approximately 50% of the assessed value of those parcels. So significant value, in my opinion, even at $291,000. Again, I support the efforts that are being made. I don't necessarily support the current offer as it is presented.
Mr. Chairman,
Supervisor Wish.
I, two questions. We had a discussion in a presentation not too long ago. I think it was in the last 6 months by the city. Are these parcels part of that?
They are. So in September of 2023, Mayor Mason presented in front of the committee. I'm not sure if he also presented in front of the county board, but at that point they were requesting the donation of 23 parcels. These 15 parcels were in that original ask of the 23 parcels. 8 of those original 23 have taken a lower priority position with regard to the city, so they're no longer being requested.
Okay, and then how realistic do you think it is that you can sell some of these properties?
I have a high level of confidence in selling most of them. Some of the ones that are vacant lots would be a little bit of a challenge for us, and that, it takes a unique development structure to be able to do something with the vacant lot. For example, just 2 months ago, we donated a vacant parcel to Habitat for Humanity. It's in the Lincoln King neighborhood at 1111 West Street. They're going to be building 3 new construction homes on that site. It works out great for that type of an entity because they have additional funding sources that can cover that gap. Essentially, if someone builds new construction on a vacant city lot, they're going to be spending $250,000 on construction costs, and they may only be able to sell that home for $190,000. So there's always going to be a gap.
Yeah, so is it safe to assume that even that if you were able to sell the ones that weren't vacant properties, we'd still be money ahead by than the 136,000 the city is offering us?
In my opinion, yes, we would absolutely, if we were to sell the parcels outright, we would absolutely be able to improve on that $136,000 value.
Thank you, Mr. Chairman. I'm against this proposal.
Thank you, Supervisor Wish. Any other comments before I comment?
Just
Supervisor
one
Miller.
more on the numbers. When you list the historical sale price, my recollection is those are almost always below the assessed value.
The historical sale price on average for City of Racine parcels that we've sold over the last 4 years has been 50% of the assessed value. So that reflects 50% of the current assessed value.
So in their process so far, they're paying more for the assessed value.
Correct.
And this offer, it's much less.
Correct.
Yeah.
Yeah, I do.
Supervisor Spencer.
Thank you. I'm involved in working with some housing organizations in the city of Racine. And I know that there's a need to renovate this area and to have affordable housing available to people. So I'm concerned that, I'm getting a feeling like we're talking about just denying the whole thing. So I guess my question is, can we go back to the table and negotiate with the city and maybe sell them the vacant lots or just renegotiate? What is the opportunity for that?
I'll jump in right here. Okay. Yes, there is the opportunity. This is being proposed today. Okay. I have been in this business of real estate for 40 years. I am pro-development. I am pro-affordable housing. I would really like to see the King neighborhood grow, which is where majority of these properties are located. I have a concern about some of the details that have been left out in this request, and I'm not happy that CDA could not be here. I wish they were, because questions that I have a year ago when the mayor came in front of us as far as what the procedures were and what's lined up for these properties, I haven't had an answer, nor do I see any information in here what is lined up for these properties. Back in 2018 and 2019, the county, through tax foreclosures, gave the city approximately 20 properties. Of the 20 properties, I believe 10 or 12 have been completed and now are on the tax rolls. Affordable housing is important. Getting the properties on the tax rolls is one of the major issues, not issues, but benefits that I want to obtain here. In my opinion, need to see some information as far as what is the procedure that's going forward. Should all properties of the 15 be granted? Should 5 of them at a time be granted? I think there's questions that came up today from this committee, more than anything, how the $136,000 number is there when the cost to the county, what the county could sell them for approximately 300,000. That's quite a difference in my mind. We're getting 50 cents on the dollar from what we could sell them for to the general public. In my opinion, that is not fair to my taxpayers that pay me taxes. I think there's a lot of questions that have to still be answered. And where is the source of funds that the CDA is using to perform these necessary improvements to the property? It's referenced in the letter, the Neighborhood Investment Fund Grant Program, which was granted to the city of Milwaukee in 2022. It's also noted in here that 5 properties have been acquired by CDA. Where are we with them? What's the process? It seems like there's a lot that's promised here, a lot that wants to be done here, but I can back up the clock back in September. I think you said, Jeff Lattis, that the mayor came to do the presentation. There's nothing that the county has seen as far as what the process is to achieve the 15 properties today that they're requesting to get to that. And when is that attainable? So I'm wondering if there are any other questions from this committee that possibly I'm looking for a motion to go to write through the city treasurer, Jeff, to go back to CDA to have answers to these questions that we have, and then come back to our committee, and then we would take this into consideration at that time.
Mr. Chairman, just
Supervisor Miller.
that's an idea, but I think we can just verbalize what we want to know, and I think the treasurer might be in a position to share that.
Absolutely.
Yeah. So, and I think one of the keys is process. You know, how's this going to unfold? I'm fully supportive of the concept. Not sure we got the right numbers, but I'd also like to know the timeline. We certainly don't want them to lose any funding if their grants have a deadline either.
I can speak to that a little bit. I have had communication and conversations with representatives in the Community Development Authority. Their grant funding deadline was extended until the end of 2026. And the scope of that project essentially requires that within that Lincoln King neighborhood redevelopment area, they have to do 40 new builds and 10 rehabs. So they've acquired 5 of the total of 50. They're looking to acquire an additional 15 from us to, again, continue to build that inventory that they can use for meeting the guidelines of that redevelopment grant. So I do know that, they've communicated that the distinction between now and the 2018 that Supervisor Trottier referenced is that they have an in-hand funding source this time, whereas last time they did not have that. But I do know that, you know, it is time sensitive and that they need to basically secure 50 parcels and begin that redevelopment process. And they've got an expiration date on that funding of the end of 2026.
So if you could relate to them where the 136 number came from and request a number that is more in line with what the general public on the average would offer for these properties. If you could ask what the process is going to be and what they currently have lined up.
Not to interrupt, but I did
Go.
speak to that as well. I did specifically ask, you know, if they had relationships or arrangements in place with general developers and those types of things. And at this point, it's a little premature in the process to have that, is what was communicated to me. They have, you know, the vision of the general developers and redevelopment of those, but without inventory at this point, they essentially don't have a need for a general developer to be in place at this point. So I will get additional clarification on that point.
Thank you. Any other comments from our committee? What Supervisor Ekman?
Yeah, like, so personally, I would be comfortable with the 291. But I would also want to know those details of the timeline, because I'm asking myself, would we be better off as a county? I don't know what Habitat's appetite and what their capacity is, but to have Habitat work their way through these 15 properties. We know that they make a good product that, exactly. And we can feed them as they go, but, so that's my point.
But Jeff, correct me, in order for Habitat to do them, we need to turn it over to the CDA. No, I'm
Not necessarily the CDA, but the municipality does need to be a
Right.
conduit to transfer those properties to a nonprofit. So the county doesn't have authority to transfer directly to a nonprofit. So essentially, the municipality would have to be in agreement to receive those properties from Racine County and then transfer them on to the nonprofit.
Supervisor Miller.
Just, you know, I'm hearing, and I do support the concept. I would just like to see how we could partner and see results. A little concerned that there's not a lot going on yet, even though they have some properties. So I could see that, you know, you get 5, 10 properties, you do something, and then maybe 6 months later, come back for more and keep it rolling.
The acquisition of those properties that I was able to directly verify has been relatively recent, you know, so within the last 3 or 4 months. So I believe that, you know, when they sent out those eminent domain letters in September, that was really the beginning process. And it is a lengthy process to work through that. They have to obviously establish communication with the current property owners, get appraisals done on those properties, do some environmental study work, those types of things. So we may be kind of on the front end of an increase in acquisition, and that this may be the first of several that, you know, have worked their way through that timeline. So I'm optimistic that, you know, it has taken that amount of time to get the 5 that they have, because it takes that amount of time to work through the process.
Committee comments? How about youth and governance? Any comments, questions? Supervisor Spencer.
I would like to make a comment that I'm disappointed that nobody from the CDA has come to answer questions. Just want that noted.
And they were absolutely invited.
Yep.
And it was expected that they would, and then last minute, they submitted that secondary letter as a supporting document in lieu of presenting.
Mr. Chairman, as a follow-up to Supervisor Spencer's, I mean, I hope they know they're invited to the next meeting.
Okay, so
Just add, this is in a TID district, a tax increment district, which the county has representation on that board, the joint review board. I am that representative for the county. I received a presentation on this last summer and nothing more substantial than what has already been shared tonight was shared at that meeting. I might have the materials still from it, but I worry that it's now a year outdated. I would expect that we would have another TID Joint Review Board meeting yet this summer. But I can share any information I have. I just don't know that it's any more than what you have already. I just don't want them to say, well, we already gave that to your representative on the board, because it's not any more than what was in this letter.
Thank you. Go ahead. So my recommendation or my request from this committee then is to ask our county treasurer to go back to the CDA to answer some of the questions. We will then receive the questions, excuse me, we will receive answers to the questions and then reschedule this for a first reading.
Thank you.
Is that in agreement with the committee? Any other questions from this committee? Supervisor Spencer.
Right.
It's all right.
So I'm wondering, and I guess I'll say it, one of these parcels is like kind of in the family. So I'm wondering what happens, like, can we pursue some of the sales so that I mean, I shouldn't go into anything personal here, I know that. But what can we do in the meantime? Do we just wait for the city to reply and get their proposals together at a more
So
reasonable rate?
generally speaking, in that interim process, in the sale process, I generally am able to get parcels back onto the tax roll within 6 months of foreclosure. These parcels were deliberately withheld from previous sales because of that ongoing negotiation and the expectation that there would be an ask. So as a courtesy, I've not presented these for sale in any previous sales. So we do have a sale that we're currently putting on schedule. We generally have 2 sales a year, one in the spring, one in the fall. Have a sale that we're currently, and I'm going to take one step back. I had originally anticipated putting these 15 parcels in our spring sale. We were doing publication for that spring sale March 28th. The letter from the city coming in for a formal request on those came in on March 27th. So essentially the day before we had to publish for that sale, we got the request from the city. I removed those parcels from that sale consideration so that we could work through the response to the request. My expectation is that I will be putting these parcels in the fall sale, which would be scheduled for September type of timeframe, September, October. So I would expect that we would be able to work through this request process and that ongoing negotiation. And if it's not resolved by that September type of timeframe, my expectation would be that we would put those in the sale because it's irresponsible to continue to carry those from a county perspective.
Thank you.
Okay. Thank you.
That just raises one more question. You think it's easier for them to deal with a vacant lot than something already existing? Or it depends?
In most cases, so I'm familiar with all of the improved lots that are in their 15 parcel ask. And in my estimation, they would be able to potentially rehab 3 of those improved lots. The other ones, they would be incurring an estimated $20,000 per parcel of raised expenses on those. So some of the ones that, to satisfy the scope of work that they are looking at doing with that redevelopment area. Now, if we were to sell those through the sealed bid process, an investor will invest in the existing property and it just will not be the same quality as what would be the end result if the city did the redevelopment through a tear down and a rebuild.
Mr. Chairman.
Supervisor Wish.
Thank you. I just got to say, I'm really disappointed because I remember this meeting that we had in September and they knew what our concerns were. They haven't come back and present this without much information, not being here to have the same properties coming up in the discussion. I think it's a lack of being able to work together as the city and the county. They sure aren't making it easier. Thank you.
Thank you, Supervisor Wish. Yeah. Okay, I'm going to move on then. Thank you, Jeff Lattis. I'm going to move on to item number 7 on our agenda, transfers. Need my glasses, sorry. Clerk of Courts, Amy Vanderhoff, authorized the creation of 1 FTE, register in the probate effective 7/13/2024, transfer of $31,519 within the Clerk of Courts 2024 budget. Amy is requesting action tonight and forwarding on to the County Board for first reading on June 25th, 2024. Amy, reading your write-up ahead of time, boy, we had the expert of all experts sitting in that position for a period of time that was so gracious and humble for their services for the county. And I'll let you then continue because I did not know that individual. I wish I had met that individual, but what a gracious person.
Yes.
Right button.
There we go. Thank you. Yes, you're referring to Kirsten Malecki, my deputy. Yes, she's fantastic, by the way. She came to present because I was at my conference. So yes, I'm very grateful for her. Yes, they did talk about this position that is much needed. We had a clerk that retired in 2010 in this position that was in the register and probate for 37 years. In 2010, they decided to make it a part-time attorney register and probate. And we've had 3 attorneys in that position since 2010. And it is desperately in need of having a full-time register and probate again. We've had some issues in that office. There are some reports that are some mandatory filings that aren't getting done. Unfortunately, the register and probate is separate from the clerk of court's office, even though it's under our budget. So it really wasn't anything that was our fault, unfortunately. But we do have staff in that office that we do, that we are responsible for. Since Judge Laufenberg has rotated last August, we've had 6 people in that office. So we have 2 people that have been a constant, and we've had 6 new people going in and out of that office. Some people have moved on to other county positions due to some of those positions are entry level or contracted positions. So unfortunately, when you come in and that's, people are looking for something different or higher paid positions or something more. So definitely we need this position. It would be a supervisory position, so they would be in charge of the clerk, be in charge of that probate division. So they would have the clerk, we have a part-time contract position, and then we have a full-time county position.
Mr. Chairman.
Supervisor Miller.
Thank you. I fully support this. This is a high customer, consumer, constituent contact area, and it's a very sensitive area for, settling estates. So I think it's a good idea. The only question I have is what is the full, we're getting the numbers for the rest of the year, but what would be the full year cost and salary and benefits?
I don't have the benefits. However, on the Exhibit B fiscal note, I put that it's prorated for July 13th through December 31st, and the budgeted annual salary of the position is $50,691. So you can add
My
50% for the fringe.
Yeah, well, thank you for the estimate on the benefits, but I apologize for missing what you already provided.
Is that a motion, Supervisor Miller?
Yes, I will move to send this to county board for first reading.
I have a second by Supervisor Wish. Discussion about this position on what Amy presented to us.
Just a question, do you feel you'll have success in filling it? Because, we have such a tight labor market.
Yes, I do. I already had someone reach out to me.
Oh, good.
Perfect. We'd like to hear that.
Yes, so, yes, I think, I don't think we'll have any problems filling the position
Great. Good.
with someone with experience.
Great. Questions from the committee? None. Questions from youth and governance? Okay, youth and governance, all in favor? Committee, all in favor? Any nays out there? Hearing none? Thank you, Amy. This will go to the county board for first reading on June 25th and then second reading 2 weeks later. So thank you very much for coming this evening.
Okay, thank you.
Next up, we have the Human Resources, Sarah Street, authorizing a comprehensive salary study and transfer of $200,000 within the contingent fund 2024 budget, requesting first reading June 25th, 2024. Sarah, good evening.
Hi, good evening. Thank you. So my request is to have a comprehensive salary study completed for the county. This hasn't been done for quite some time from the paperwork that I could find. I believe the last time that a official salary study completed by a salary expert was completed in 2012. Since that time, our salaries and just the makeup of the county have changed dramatically. At that time, there was approximately 25 pay grades, and now we're up over 70 pay grades. So our system has just gotten very complicated, and it's time for an overall comprehensive look. The way that we've been doing it for the last 5 years is kind of on an as-needed basis, like, wow, there's a ton of vacancies over there, we need to address that, but it's just not taking that objective view to see what's going on countywide. And every county is unique, because I've heard people say before, well, other counties completed them, can't you just copy theirs? And you really can't, because, for example, Kenosha County doesn't have 911 dispatchers. They have their joint services that's separate from the county operations. A lot of counties don't operate a behavioral health system in-house like we do, so that adds a little layer of complexity. Also, we took over the public health, and kind of to help us acquire the public health, we didn't want to mess with their salaries too much. We kept them pretty consistent, but we've kind of just ended up with a very large, kind of complex salary schedule. So for those reasons is why I would ask to have this comprehensive look.
Questions from the committee? Supervisor Ekman.
Do you have a quote for this?
So we put out an RFP, so we're estimating about 200,000. So that's what the request is for tonight.
Okay. You wait to get the
Yeah,
RFPs back.
Yeah, the RFP is out, so we'll have a good idea in the next month or so.
Sarah, what is the timing, again, and procedure of this? So hypothetically, if you had the RFP accepted today, how long does it take to do a study?
Yeah, so because we haven't done one in quite some
Right.
time, I'm gonna kind of rely on the experts. I put in the RFP that we would like it late fall. However, I don't know that that's reasonable. And from the questions that I've gotten back from people who are looking, they're asking if there's significance with that time. In my opinion, I think as soon as possible, but being reasonable, and it would be something we'd be able to work into the 2026 budget is what I would imagine, that we'd have this in 2025 to be making decisions for 2026.
Yeah, and the companies that these are sent to, are these for public positions or are these private for private positions? Meaning, when they did the analysis, are these companies that deal specifically with public positions?
Yeah, that's part of what we put in the RFP, that we're looking for
Sure,
people who have
right.
done similar requests or similar studies in the past of public employers.
Public employees.
Yes.
Great.
Yeah, and something else just to add too is, we took a look in 2019 in-house, but again, there was nobody that's a salary expert looking at it comprehensively and able to do that comparison. Also, benefits weren't a part of that. So these experts will also be comparing benefits, because maybe you have a county that pays way better, but their benefits aren't as rich. So they would be able to make those comparisons as well and give us a plan to move forward in future years.
Mr. Chairman.
Supervisor Wish.
Thank you. Supervisor Miller may remember, I don't think a lot of the rest of us, the rest of you were on the board or on this committee, but this is something we asked for, I don't know how long ago. It's probably 6 years ago. Because we had, basically, we were trying to figure out where people fit in what salary range. So I'm all for this. So.
Thank you. Thank you. Is that a motion? Supervisor Wish? Is that a? Okay, great.
Second.
We have a second. Madura, Youth and Governance, question for me or for the director or one of the supervisors?
Yeah, do you mind just explaining the process of the comprehensive salary study or what it is?
Well, I will be finding out too, but they're going to interview employees. They'll be looking over all of our job descriptions and then they'll be doing a comparison. So, you know, you can give any title to a position. So that's also what makes things difficult. You might have a manager of, and this is probably a bad example, let me think of a good example, marketing coordinator for the county. And another county might have a marketing manager, but really they're doing the same types of things. So you have to not only look at the title, but what the job duties entail, and then compare what are companies in the private sector paying, what are other counties paying, what other similar employers are paying, and try to come up with a plan of this is what we think is appropriate based on the information they have. And so then they would put a plan forward for us. And hopefully condensing and simplifying our current salary schedules that we have.
Thank you.
Good question. That ran through my mind, wondering if you understood what they were doing. Very good. Okay, I have a first and I have a second. Any additional discussion about this? Hearing none. Youth and Governance, all in favor? Committee, all in favor? Aye. Any objections to this? Hearing none. This will be moved on to the County Board for first reading on June 25th, 2024. Thank you very much, Sarah.
Thank you.
We're getting there, you guys sit in the back row. Okay. Thank you for being patient. Next up, number 8, I have Corp Counsel, John Sturtevant, and everybody else that's here representing the legal department for the county. Welcome. Good to see you, John.
Good evening. Good evening, honorable members of the committee. I'm here to talk a little bit about what is on this agenda for what's called this grievance committee. And I have a PowerPoint that has just been put up on your screen. But before we get into that, I guess I just want to give a little bit of the historical background of why we're presenting this to you. In my 26 plus years with the county, the grievance process that is contained in the collective bargaining agreements for the sheriffs, deputy sheriffs, and the command staff have typically been what has been used with respect to any discipline that the sheriff may impart on any of his employees. The two unions there have been, in my 26 years, have undergone numerous counsel, that represented them over the years. And we've now had a union attorney for about the last year or two, I think, that has been representing them. And they have uncovered what's in the statutes and what's in our ordinances as another option for this process. And so ultimately, what we are here for is that I know that there's probably 1 or 2 cases that could be coming now before the committee for this purpose. Based on a couple of disciplines that occurred in the sheriff's department, there could be more. But that's why we wanted to at least give you the background. So this is, although it's not new in the statute, and it's not new in our ordinance, it has just been something that has not been utilized by the unions in the past. So with that, I'm going to start going through. I think I've got about a dozen slides, so I'm going to try to go through these relatively quickly. Where do I have to point my, oh, it moved. Let's try that again. All right. That does look like the first one. So the statute that I'm referencing is in 59.26 and it's 8B1, which basically says that the sheriff, if he or she is going to suspend, demote, or dismiss a deputy, that they have to send a written complaint to the grievance committee. And that grievance committee is in that second paragraph of the statute there, basically is to be appointed in the same manner as most of the other standing committees that are before the county board now, and of which the finance committee is one. So, and we have an ordinance that we'll get to later in these slides that basically references this exact same statute and basically nominated the FHR committee. It may have been slightly different language, but as our grievance committee. So that's the first slide. And that just kind of, again, talks about what the sheriff has to do in making a decision to, again, suspend, demote, or terminate a deputy, that has to be leveled in a complaint and then sent to this committee. Then the committee, according to statute, under the second slide, has to immediately notify the accused of the filing of that charge. So the minute that the sheriff's department or the sheriff sends over that complaint to this committee, then the obligation on the committee is to notify the accused of those charges. I suspect that there may be some formality there in the sense that the sheriff's department will probably be notifying the individual. There's been an investigation and ongoing issues. They may have noticed that this will be coming to the committee, but nonetheless, the statute then says that, you know, we're supposed to immediately notify that accused deputy of those charges and show, you know, give them a copy. Then that deputy has the opportunity to request an actual hearing before the grievance committee. And that's what the second part of the slide talks about, is that they can request that hearing within 3 weeks after the filing of, or we have to provide that hearing within 3 weeks after they make a request for such hearing. And we'll get to some of these details a little bit later in the slides, but I want to just go through the statute so that you're aware of where it comes from and what the requirements are. And then, as it notes, if the deputy does not make a request for a hearing, the statute says that then the committee can take whatever action it considers justifiable. But again, I think the way we envision it is that it would go before the committee, then not just for a full-blown hearing, but probably a little bit more of a pro forma. You have the information. If it's not being contested or asked for a hearing, you know, I suspect that it would be reviewed. And as long as you feel that it meets the criteria, the next slide, you would approve that decision by the sheriff. If not, and the individual wants to have an actual hearing, as it indicates in the statute, there can be testimony, they can be represented by counsel. And in fact, that's what we would envision. Likely the union's attorney would be representing the deputy, and we would have likely outside counsel representing the sheriff's department. Our office, who's present here, would then kind of serve as we do as the parliamentarian in the county board or any other meetings like today. We would be here to kind of assist if there are issues with respect to how the hearing's proceeding and any questions about that. The statute also requires that it be transcribed. So as you know, that could be a court reporter or a tape recorder. I mean, I think at this point, we would just simply envision having some audio, video recording of it, so that if there is a question and had to be transcribed, we could obviously do that. The last thing that that slide talks about is the fact that the committee would have subpoena power. So if somebody wanted to have a subpoena issued to have a potential witness here, the committee would have that authority. We'll see that in a lot of administrative type hearings. An administrative law judge would have the ability to issue those. But typically, I would suspect that, again, given that counsel will be involved, I don't know how often you're going to be asked to draft a subpoena. I would suspect that the counsel would be drafting their own and have any witnesses at that hearing if they wanted. So then the next slide is really, again, kind of more the meat of what the statute requires. And so again, it says now if you have this hearing before the grievance committee, you'll have to determine then in writing whether or not the charge is well-founded. That's what the statute uses to determine whether or not a suspension, demotion, or a termination was appropriate. Or potential could be a reinstatement if this charge is not appropriate. So what the statute lays out is what we call the just cause standards, and those are listed on this slide. And that is these 7 criteria, which in my opinion, these have been kind of utilized in the previous grievance process before under the CBA agreement. So these are generally the same standards, but now instead of having, for example, an arbitrator at the Wisconsin Employee Relations Commission hearing this, this would be heard by the grievance committee. But these standards are what I consider relatively simple. So the first, handful, if I go through relatively quickly, you'll see whether the deputy had knowledge of the rule. So assuming it's some level of insubordination, you can imagine that that's in an HR manual or the deputy's manual about insubordination. So did he have knowledge that he's not supposed to be insubordinate? Is he aware of that rule? Second, is that rule reasonable? I think most people using that as an example would say, yeah, insubordination is a reasonable rule. You can't be insubordinate. The next would be whether the sheriff made a reasonable effort to discover whether or not that deputy violated the rule. So this goes into what that complaint that you're going to get from the sheriff is about. And obviously, the sheriff's department has an investigatory unit. They're going to be investigating this rule and the potential violation of the rule, and then be able to put that report together. And I suspect that in most cases, they'll have done a reasonable effort to determine that the rule was violated. The next is that rule fair and objective? Again, using the insubordination or attendance or something, most people would agree that that's a normal and fair rule to have to abide by as an employee. The next is probably more important, and we'll get to this even in a later slide, is whether the sheriff discovered substantial evidence that the deputy violated the rule. So we'll get to this, what that means, but in a sense, there's going to have to be in the record that substantial evidence that this rule was broken. And then another one that I think kind of goes without saying is whether or not the rule was fairly applied and without discrimination. We would hopefully assume that any department, including the sheriff, would not be, not fairly operating and or, discriminating in regard to those rules. And then the last one, which you see more often, is really whether or not the punishment fits the crime. So in other words, does the discipline that's been levied for this violation, is that reasonable? Does it make sense? And so if anything, that's where, at least in my years of experience in dealing with the grievance process through the CBA, which is similar to this, those are going to be the issues, is was there evidence to support this, and did it make sense then? If there was evidence to support it, did that discipline fit that rule violation? So that's really the main slide that I want to spend most time on, because that kind of lays out what that just cause standard is and what your obligation is to go through those 7 standards and make sure that they have been met. In the last slide that I have with respect to the chapter 59 section is here, 5926 sub 9. There's 3 components to that, and basically A and C talk about the fact that if the sheriff does make a decision to terminate or suspend somebody, that he cannot do so without pay until there's been a final decision by the grievance committee. And if a final decision is made by the grievance committee between the filing of the complaint and then the time that the final decision is made, I mean, what subsection C talks about is that then that deputy is required to arguably pay that money back that they would have been being paid while on that suspension or on that termination. And so then the last thing that's probably more of interest is in section B, which kind of talks about what I've been addressing with the CBA and then the statute and how they can, here as it indicates, you can't diminish one or the other's rights. So they can still work in tandem. So once somebody goes through the grievance committee, you'll see that they have a right to appeal that decision to a circuit court, or they may be able to then go back into the grievance committee process through the CBA and arguably get then what we'll call an independent decision, whether it be from the circuit court. But now if they decide to go through that process, you could arguably get then another decision from a work arbitrator. So that is the 4, the provisions I wanted to address in chapter 59. And then these next 3 slides just kind of talk about where this authority comes from in our ordinances. And so 17-1 in our current ordinance basically goes through and says that we will be following chapter 59, which I've cited. And that, again, members of the Deputies Association and the Command Staff Association, those CBAs, they can be still subject to those. The next slide then talks about 17.2, which is, again, saying that if anybody who's grieved under chapter 59 has, again, the ability to come before this committee. And again, it talks about how those two collective bargaining agreements can still run in tandem with this. And the final slide on the statutes and ordinance is really 17-3, which basically says that the committee, as required under 59, shall consist of members of the Personnel and Community Services Committee, which my understanding had been a precursor apparently to the Finance and Human Resources Committee. So I wanted to go through the statute and I wanted to go through the ordinance so that you understand the legal basis and then the ordinance that basically interprets that and incorporates it into our statutes. The next thing that I have then is just a handful of slides that'll just go a little bit more into detail about what you can expect. Again, high level, I'm giving you a high level what the statute says and what the ordinance says, but kind of a high level of then what would be these procedures for an actual hearing before this committee if one's requested. So the first thing to note is that obviously, any process like this, you're going to be entitled to due process, right? Did they have notice of these charges? Did they have an opportunity to respond, et cetera? And that's kind of laid out in the statute in 5926 AB 1 through 4. The other thing I did is in this slide is cited to you what's commonly referred to in chapter 68 and chapter 27 as those administrative procedures that exist in 227 is for state decisions. So say you have a public entitlement, whatever that benefit is, if a decision is made that you're not entitled to that or your benefit should be revoked for whatever reason, chapter 227 in the statutes talks about how they get this due process and what the due process rights are laid out in that statute. Chapter 68 is the equivalent of 227, but for a county or other municipality. So if we made a decision specific to some revocation of a foster care license or something else that may only be related to the county, same issue would be, we would be following those chapter 68 proceedings. Now, 59 lays out some of these, which I've already kind of highlighted in the statute and we'll go through. So arguably 227 is a state matter, 228 is a municipal matter, that we have some language in the statute that already talks about how the due process we're supposed to provide. But I cite those because they give you an idea of what an administrative process or administrative review hearing would look like. The next would be that the role of your committee is to be, again, that impartial, independent decision maker, and that you're kind of reviewing this as a reviewing entity almost too, like a court would. And we'll get to that at the very end of the last slide. So again, we've talked a little bit about this. I highlighted in chapter 59, prior to commencement, our obligation through the committees to notify the deputy of the charges. As I indicate, he's likely going to have already seen that complaint, but he'll get it from us to know here it is. If he requests that hearing, as it notes here, we'll have to give him that within 3 weeks of that request. Obviously, you can reschedule that if the parties agree to do so. That's not uncommon depending on summer vacations or whatever might be happening in people's lives, for that 3-week period. But again, I think the parties would have to agree. The notice that we would send would have obviously a copy of that written complaint, and then we would typically send what you'll see an administrative law judge do in these administrative hearings is say, we're going to have a hearing in 3 weeks. And so 1 week prior to that, I expect both parties to exchange any witness lists or exhibits they intend to admit into that hearing. So in essence, it's an ability for the administrative law judge or a grievance committee like yourselves to be able to say, hey, we're going to have this hearing, but we need to know how many witnesses are you going to have. That way we can all plan for how long this may take, et cetera, et cetera. We also talked about, again, issuing subpoenas. Again, you could potentially do that. Again, we'll have drafts of some of that if that occurs. But again, I suspect that it won't likely be common. It'll be something that the attorneys are handling on their own. The next part of the bottom of the slide is that there can be no ex parte communication. So just like when we're talking about, walking forums and things like that that you're used to, this is something that can only be discussed at that proceeding, right? I mean, that just like you would tell a jury, you guys are here today, please don't review the papers and everything else, just focus on what you hear in this proceeding. Same thing there. So that you'd be doing that. You're not going to have communications with either attorneys separately. It would all be during that hearing. As indicated, parties are likely going to be represented by attorneys. As I noted, the union will be there, I suspect, and then we'll have probably outside counsel to the sheriff and then us serving as your parliamentarian. The next slide talks about, hearing. Is it going to be open versus closed? You guys are probably all familiar with 19.85 that talks about 6 or 7 opportunities you can go to in closed session. And one of them is to discuss personnel type matters. So, there's this concept that it can be closed, although even under 19.85, that deputy can ask for this to be in an open session. So it's possible it could be, but we would, I think at a minimum, even if that were requested, we would allow, I think, the committee to go into closed session to deliberate. Now, once you've heard all that evidence, just like a jury would go back to their jury room and deliberate, you'd have that opportunity, I think, to do that in closed session. Obviously, you're going to be the arbiter here, right? You're the administrative law hearing equivalent. So you're going to have to determine the weight of the evidence. We'll want to make sure we are marking those exhibits that have come in and we know who the witnesses are so that we create that record. Obviously, everybody's got to have an opportunity to be heard. We typically will have an oath administered, whether it's an administrative law hearing or this, we would expect that would be issued. And then obviously, if the hearing is not done, again, the parties could agree to adjourn it, come back next week, day after, what have you. Then the last slide that I have kind of just again talks about if you've now gone through this hearing, you have to then put your decision in writing. It would have to, again, as I've noted from the statute, use that term, whether or not the charge is well-founded. But I really say, when you look at the well-founded, it's based on whether or not those 7 just cause criteria are met. And that's why I highlighted what is substantial evidence here on this slide. Because I mentioned that in the statute. That's what the evidence has to be in order to determine whether there was a violation, if it supported the discipline. So substantial evidence under this case I cited is that quantity and quality of evidence that a reasonable person could accept as adequate to support a conclusion. So in other words, that's where I talk about this being somewhat more of a review. You're going to have all of this information already provided to you by the sheriff's department, the full investigation, what they found, and why they've made a recommendation for X amount of discipline. And so you're going to have to review that at that hearing and determine, is there substantial evidence in that record? Like I say, we'll use this quantity and quality of evidence that a reasonable person could accept as adequate to support a conclusion. So if there's evidence in that record to support that this individual was aware of the rule, violated the rule, there was a reasonable investigation done, and the sheriff's determined that as a result of this, the egregiousness of this violation, he should be terminated. If that, in your mind, reaches that a reasonable person would have seen that evidence and agree that that is adequate to support that conclusion, then you would just simply affirm that decision. And so then the last part of the slide just talks about, again, there are these 3 options that you're going to be looking at, whether it's a full termination, demotion, or suspension. And then it talks about the potential ability for reinstatement. So I tried to do that relatively quickly. I don't know how quickly it was, but that was the slides to just give you an overview of what this grievance committee is required to look like by statute, how it's been referenced in our ordinance that you are that committee, and that you can expect, as I note, we're probably aware of at least 1 or 2, and there could be more that would be coming before the committee. The one thing I would note is, before I take questions, is that, the expectation is that this will probably end up being a standalone committee. I mean, in other words, the Finance and Human Resources Committee, as you guys know, is probably our most heavy lifting committee, or you're the most busy. You have a lot on your plate every, a couple times a month. And so you can imagine that if you're forced with having to have a hearing and go through all this, and maybe a number of times per year, it's just a bigger ask. And so our thought, and again, our ordinance provides that you're that committee right now, and that's what it's going to be in the interim. But we'll be looking at this to determine if it makes more sense to create a standalone committee, much like your ethics committee, if you're familiar with that, so that there'd be a separate committee that would be dealing with these, is the thought. So with that, I don't know if anybody has any other questions or concerns. Supervisor Wish.
In 17 years or 18 years, or however long I've been on this committee and with the county board, I've never had this kind of presentation. And I'm glad you prefaced that there's something coming up. I would like a copy of that in writing, not emailed, in paper form of that ordinance.
Sure.
If possible.
Sure.
And I don't like assuming anything, but how soon are we expecting something on the horizon?
Correct. I mean, I don't know how soon. I mean, other than, because it's obviously dependent upon the sheriff completing that investigation and sending the complaint to the committee. But all I can tell you is that I am aware of one or two that are in the pipeline, and there could be more.
So is the chairman of the committee, is he the arbiter?
The committee itself would be the arbiter.
He would be the chief arbiter.
This committee, the way the ordinance reads.
I understand,
Is our
but
personnel.
who takes the lead? Not everybody here can take a lead in the.
I would envision it would run just like this committee is now. If that's, in other words, you have a chair, a vice chair. So that would be, the chair would be the main.
And assuming we come to a decision and it's not a decision that the party would be agreeable to, what's the next step in the process for that person? Is there one?
Yeah, well, as I indicated, the statute talks about their ability to appeal this decision of the committee to the circuit court. So then they could ask for a hearing in front of the circuit court again. And again, it's probably somewhat level of an appellate review, but they would have that right. In addition, as I indicated, what's noted in the statutes and in ordinance is that the CBA can still run in conjunction with these as long as they don't, take away either's rights. And so in what we have seen is that an individual would have not only this appellate right to the circuit court, but if they wanted to so choose, they could then probably process it through the grievance process in their CBA, which would then allow, as I indicated, through likely if you took it all the way to the final step, it would be for a hearing before a arbitrator through the Wisconsin Employment Relations Commission.
So
and that's where I've been many times, in these cases previously.
Am I correct in saying that we've not had this happen in 17, 18 years?
You are absolutely correct.
Okay, thank you.
Which is why I prefaced my comments before I went into this statute, and this is that, not to say that it hasn't been on the books and in existence, and same with our ordinance. We ourselves cite chapter 59. It just has not been utilized by the union up to this point. And now that it has, we will be processing it accordingly. So if the committee receives these complaints, which we expect, we wanted you to at least be aware. And then obviously we can certainly provide further guidance, at a higher level or what have you, if need be. Sarah.
Sure. So I have spoken to some other county HR directors, just asking about their grievance committee and them utilizing this process. I anticipate once we get through these few that are in the hopper currently, that it's not going to be frequently utilized based on what other counties have said, that a lot of deputies will want just to take their lumps and not go through this process because it will be an agenda item. It opens things up for them. So from what I've heard, Washington County became aware of the statute the same way that we did after receiving a letter in the last couple of years. So and a lot of counties aren't aware or just became aware. And then the counties that do have the grievance committee, it's not being utilized. So just to give you a little, what you might anticipate.
Good comment.
Or
Good
expect.
comment. Ironic, last week I had somebody approach me and asked me as a reader of the New York Times if I've read a new book out by a gentleman by the name of Frank Bruni. And the name of Frank Bruni's current book as a New York Times writer is The Age of Grievances. So those that want to pick up this book, I haven't read it yet, okay? But this fits right into this whole concept of where we are today with grievances. It's called The Age of Grievances, Frank Bruni. Any other comments?
Is that similar to Seinfeld's airing of the grievances?
That probably came from there, right? No, John, if we could get the request of Supervisor Wish to him somehow.
I have my team behind me and they're the more intelligent group and they will, she will be able.
Nice, would I expect anything else?
Do you have a copy, you have a copy of the PowerPoint? We can certainly make sure you get a copy of the PowerPoint and we'll send the statute with it.
I'll print out the statutes and give it to Liz at the county board.
Perfect.
I do have one other
Yes,
comment.
sir.
I've been involved in several hearings as a witness for someone that was terminated in a couple different positions that I've had.
Administrative type hearings, then you're saying?
Yeah, but it was termination issues
Sure.
that they were grieving. They're no fun. Thank you.
No, yeah, and that's why I think I can reiterate what Sarah, our, HR directors indicated. I mean, I don't think you'll be inundated with these because depending on the rule that's violated and the facts that go with that, you can imagine most people may not want that aired. That may not be a grievance they want aired. And that's why even, I think Sarah and I can say in the last handful of years, even a work arbitration it doesn't happen one, but every couple of 3 years too. So, I mean, they're just not something that you want to air unless there really is an error.
Okay. Next up, we have Supervisor Miller.
So typically, when we have a closed session at the end of the meeting, we thank and bid farewell to our youth and governance reps, because you can't, by state law, you can't be part of this. And even if we do something, we can just let you know later. So thank you so much. And to our super intelligent guests in the back, as John referred, we're sorry we didn't have you last time when we adjourned at 5:20. But I am going to move that we go into closed session pursuant to section 1985 1G of the Wisconsin State Statutes to discuss with legal counsel claims against Racine County, namely Mend Correctional Care PLLC bankruptcy. And the committee reserves the right to reconvene in regular session to take possible action on items discussed in closed session.
Second.
Okay, I need a roll call. Supervisor Miller,
Yes.
Supervisor Ekman, Supervisor Spencer, Supervisor Wish, Supervisor Nielsen,
Yes.
Supervisor Trottier says, yes, we are now in closed session.